It is no secret that we are in the middle of an economic recession today because of the effects of the coronavirus pandemic, especially when it comes to production and transportation. That's why plenty of different companies have seen large losses during the height of the pandemic. In fact, the S&P 500 proceeded to collapse by 32% in March as the coronavirus pandemic grew, and have actually lost 60% during the worst period possible. So if you don't want to lose as much money as some of the large companies have in 2020, you may want to consider choosing the right investments to put your money in. But because there are plenty of places you can invest your money, you might begin to wonder what to buy during this 2020 economic crash to build or maintain your wealth. Hi, and welcome to Investing For You. If you're new to us, please do subscribe to our channel and leave a like on this video. But if you're already a subscriber, we're happy to see you again. Now that we have that out of the way, let's talk more about how to build wealth in 2020. Stocks. One of the most common ways for you to build your wealth through investment is by putting your money in the stock market. However, as we have mentioned, the S&P 500 actually lost a lot of money during the pandemic because of the effects of the coronavirus on production and transportation. This makes investing in stocks a bit too risky for most of our stock market investors. But, nevertheless, you can still invest a lot of money in the stock market to build some wealth even in the middle of this economic downturn. During a recession, most investors should avoid investing in companies that are highly leveraged, cyclical, or speculative, as these companies pose the biggest risk for doing poorly during tough economic times. However, it is better for you to invest in companies that are well managed because of how they are still able to survive through the pandemic, especially if they have low debt, good cash flow, and strong balance sheets, even though they might not be the most profitable companies. But you should take into consideration that there are some companies that do well more than others, even in the middle of a recession. These are the companies that are in industries such as utilities and consumer staples. That's why food production companies and retailers were still able to survive through the pandemic, even though they may have seen sizable losses in profits. So, for investors, putting your money on such companies may still help you build wealth, even when we are in the middle of an economic crash. Real estate. We all know what happened during the 2008 financial crisis when the crash of the housing market led to an economic downturn. Since then, plenty of people have been a bit too wary of another housing market crash. Meanwhile, those who owned properties back then were too quick to sell their houses that they failed to benefit from the economic recovery a few years later. Could that become the same scenario this 2020? Well, everyone knows that the economic crash has led to some of the lowest interest rates, which have made it easier for people to qualify for mortgages. This was the same exact scenario back before the 2008 market crash, when banks and real estate agents lowered their standards for mortgages in an attempt to make more money. But because of that, those who realized that they were unable to pay off their mortgages ended up defaulting, which eventually led to the housing market fiasco that shocked the economy in 2008. Similarly, the same scenario could happen today because of how interest rates are low enough for people to be able to qualify for mortgages. This means that it may not be the best for you to invest in real estate right now if you're unsure whether or not you can pay off your mortgages. But for those who are confident enough in their own financial capabilities, it might be the best time for you to invest in real property while houses are still cheap and interest rates are low. Selling the houses at a premium later on when the economy has recovered may give you a quick profit. In any case, even those who are unsure of their financial capabilities may still create wealth through real estate by buying houses to rent them for passive income. Try investing real properties in places where the labor market is least affected by the economic downturn, so that you can be sure that there will still be people willing to rent your property. The passive income might not be enough to keep your entire family fed, but you can be sure that it will help make the expenses a lot easier to bear in today's economic crash. Bitcoin. In the case of cryptocurrencies such as Bitcoin, it might be a bit too difficult to truly tell whether or not you should invest in it because of how volatile digital currencies can be. Bitcoin is at the very high-risk end of the investment spectrum because the price of cryptocurrencies is volatile. They are quick to go bust, while others may end up becoming scams. In some cases, however, they may increase in value and bring some returns for investors. As Danny Cox from financial services company Hargreaves Lansdowne puts it, cryptocurrencies could remain niche, become mainstream, vanish without a trace, or anything in between, and any investment should be considered as very high risk. As with any investment, do your due diligence and don't pin all your hopes on one company or one cryptocurrency. Spread your money around so you spread the risk. If you're really willing to invest in Bitcoin, make sure that you're not putting all of your eggs in one basket so that you won't have to risk losing all of your wealth for something that is too volatile. Gold. Gold is a hard asset that also tends to do well during an economic crisis. Even though gold generates no earnings and provides no dividends, it's a commodity that can be traded for money and other assets. After all, gold used to be the main currency of the world before the creation of formal currencies. And in case you didn't know, the more dreadful the economic situation is, the more valuable hard assets like gold can become. For those looking to invest in gold in today's economic downturn and for the long term, you have to understand how the global supply and demand of gold works so that you can actually create wealth even at a time of crisis. You can take a view on the US dollar since gold is denominated in US dollars. Gold is an imperfect hedge, but it might help you build your wealth even when we are in the middle of an economic downturn. So, regardless of where you may want to put your money, the important part is for you to carefully analyze the situation and make the right decision before suddenly plunging in. As long as you're diligent in your choices, you can create wealth in stocks, real estate, cryptocurrencies, and gold. That's it for our video, and we do hope that you learned a thing or two about creating wealth in an economic crisis. Thank you for watching, but be sure to subscribe to our channel and leave a like on the video.